Hello, everybody. Welcome to the Anomaly course, Core Content Lesson 6. In this lesson, we're going to be covering the entire GXT model. Let's go ahead and start with alignment. So what is the entire goal of the GXT model? And that is to mechanically align three time frames in the same direction, specifically three multi-time framed expansion candles. And that's going to be the daily, the 4-hour, and the hourly/30-minute. So within the daily candle, you have 6 4-hour candles. So essentially, within your time window, you're going to try to align a specific 4-hour candle with the daily candle. And within that 4-hour candle/session, you're going to time it by aligning a hourly or 30-minute expansion candle within that 4-hour candle. So this is what that will look like. The daily is an expansion candle. When you take a trade, the 4-hour be an expansion candle. We're not going to trade within this 4-hour time window. Why? Because it has a large wick, right? And when you take a trade, the hourly/30-minute will also be an expansion candle, right? As you can see, this is expansion candle, this is an expansion candle, this one is not, right? It trades to a key level, C2 candle. Now we're ready to be aligned again. You can trade this expansion candle, right? So let's just take this for example, because it's a good candle to trade here. As you can see, when you take this trade, this has a small wick on the hourly, this is a small wick on the 4-hour, and the daily has a small wick. And now you're just aligning all three candles in the same direction. So now let's get into how to actually do this mechanically. Alrighty, so here we are. We're going to be talking about how to profile a higher time frame candle with an aligned swing. So there is 3 sequences to the GXT model. The first one we're going to be covering is the continuation sequence using the weekly as the higher time frame candle and the daily as the aligned swing. So this specific aligned sequence is when a higher time frame candle opens up within an aligned swing. So notice how this is the higher time frame open, and it's opening up within a C3, right? So it's going to be opening up within a C3 or C4, that higher time frame open. And because of that, it doesn't really have to put in a significant low. It should just expand, right? Because the previous candles before it have already reversed. So this is the continuation sequence. So now let's get into the reversal sequence. So the reversal sequence is really simple. It's a higher time frame candle's high or low. In this case, the low is formed from a aligned swing, right? So instead of looking for this weekly low to be formed from like a specific time frame CSD, we're going to wait for a daily C2. Once a daily C2 is put in, we're going to assume that's the low of the week, and we can trade the following expansion. So this is a reversal candle. Now let's get into expansion candle. So this is when we do not open up within an aligned swing. So the low of the week has to be formed from one, right? Now let's go over the aligned sequence. The aligned sequence is when price is already within an existing higher time frame expansion candle, and on the lower time frame, price misaligns itself, it retraces. So this is when you wait for the aligned time frame to realign and form a C2 candle. Once that C2 candle is put in, now you're back on side with the higher time frame expansion candle, and the higher time frame expansion candle can now continue. Now let's cover the GXT sequences using the weekly and daily candle profiling alignment. So this is going to be GXT continuation sequence where a weekly candle is opening up within a daily swing. Let's go check that out. So here we are on the daily chart. And notice how we're opening up this new week in an aligned swing, right? A daily C3. This is the GXT continuous sequence. When you're opening up a higher time frame candle within a swing formation on the aligned time frame, right? So this is where Friday reverses, and we're expecting Monday to continue, right? Within a C3. Or if it maybe the week opened up as C4, that would also be okay. So now let's go ahead and cover the GXT reversal sequence. This is where an aligned swing forms the high or low of the week within a reversal candle or a continuation expansion candle. So you're going to see that both of these candles, these weekly candles, right, they're both going to be confirmed by a daily swing formation confirming the high of the week. So as you can see, we hit this weekly fair value gap. So there's a reason to assume that this candle can reverse into expansion because it has a small wick. We're consolidating, it hits a key level, and all that good stuff. Once we close, we have that C2 candle, so we can assume continuation over here on the weekly candle 3, right? We have open objectives down here, so everything checks out Now let's go see what confirms the high of the week here. So here we are on the daily time frame, and let's look at how these candles form, right? We want expansion candles, especially bearish in this case, to open high first. Let's see how they form. Opens high first. The high of the week is confirmed by a swing formation. Candle 2 closure here. Perfect. Closes like an expansion candle, so expect the next couple days of the week to go ahead and target all of these failure swings, right? And as you can see, Friday hits that level there. And if we're going to continue the previous week from the previous week's range, we're going to look for a key level within the previous week's range, right? What do we have here? A gap within the 50% area. And the week opens high into it, which is confirming this continuation, right? Going from IRL to ERL and ultimately to those draws to the left, right? But as you can see here, what confirms the high of the week is Wednesday, C2 candle. Now you can expect the next couple of days remaining within that week to continue towards that draw over here to the left. Now we're going to be going over GXT aligned sequence. This is essentially where the candle that you're currently within is already an expansion candle, and then we realign ourselves on the aligned time frame to continue that expansion. So as you can see, this is a candle 3 on the weekly time frame. It's already expansion candle, so let's drop into the daily and see what I'm talking about. So here is that weekly open. Here we are on the daily chart, and you can see price expands significantly away from the weekly open. Now you are aligned with the bearish expansion candle, and as you can see, we sort of misalign ourselves as price retraces back to the opening price. So now you do not have two time frames aligned, right? You have the weekly candle as a bearish expansion candle, but now this daily candle that you're currently within does not support expansion lower. So you're essentially just waiting for it to hit a key level within the current candle's range. And then once it closes, you have a nice swing formation. Now you can assume the next candle will realign itself with the higher time frame candle. So now you're aligning the weekly and the daily as an expansion candle. There's also a reason to continue as we have these failure swings, right? We always want to use context. This is my favorite way to trade the GXT aligned sequence is when we have a gap within the current candle's range. We retrace into it. We have a C2 candle, and C3 will align itself with the higher time frame expansion candle. So now let's go over the continuous sequence using the daily and the 4-hour. This is what you're going to be using to profile the daily candle. Is using 4-hour swings. So here, this is a bit of a rare one, but this is when the daily candle opens up within an aligned swing, typically when PM session reverses, and then that's when you can expect Asia to expand because the first 4-hour candle of the day is opening up as a C3. Now here we are on the reversal sequence. This is mainly where we're going to be using to profile the daily candle, is waiting for a swing points to form the low or the high of the day. So here, as you can see, we have a daily reversal to expansion candle, and what is forming the low of day, that 4-hour swing. We are mechanically aligning these time frames in the same direction. And here we have a daily expansion candle, what forms the low of day, a swing point, aligning these two time frames. So here is the daily / 4-hour aligned sequence. This is when the day expands and then retraces. You're just waiting for that 4-hour to realign itself with the already existing daily expansion candle. So now let's go ahead and cover the daily and 4-hour alignment for the GXT candle profiling. So here we are on the daily chart. Let's go over a little bit of narrative here. What do we have here? Daily gap, daily C2, and we have this here as our ERL. So IRL, ERL, C2 candle. So here in this first example, we're going to be going over the GXT continuous sequence, and that is when you're opening up a higher time frame candle with an aligned swing. So here we're on the daily, so we're going to be opening up the daily candle within a 4-hour C3 or C4. Let's go ahead and go to the 4-hour time frame. So here we are on the 4-hour time frame, and as you can see, this is always going to happen usually where 1400 reverses. So we hit a key level really late in the day, and we come back into the range, forming a C2 candle. So you're gonna have a 1400 reversal and an 1800 continuation, like so. So you can already begin to trade at 1800, looking for an expansion within C3. Now let's go over the GXT reversal sequence. First, let's go over a daily reversal candle. We're going to be confirming the low or high of a higher time frame candle with an aligned swing. So here we're on the daily. we're going to drop down to the 4-hour to look for that confirmation. So here, just a little bit of narrative. We have taken out this daily ERL and we have SMT. So what we can actually do is look back within the previous day's range for a gap. We're going to be trading ERL to IRL. So how do we want a bullish day to form? Ideally, is we want it to open low first, right? So exactly what we do, we open low first, we confirm the low of the day with a C2 candle as our confirmation. Now we have aligned multiple time frames, right? We have a small enough wick to expand back into the range, targeting IRL. And that is a beautiful example as we have C3 closing very nicely. So you can trade C4 in PM session as there is an open draw. So now let's go over the GXT reversal sequence where we are going to be confirming the higher low of a candle with a swing formation again, but this is going to be an expansion candle. So as you can see, the previous day closes a C2 from a gap. So we're essentially trading IRL to ERL, and we're going to confirm the high of the C3 with a 4-hour swing. So here we are on the 4-hour time frame, and as you can see, the first 2 hours of the day consolidates. So if H consolidates, what can we expect London to do? To manipulate to form the high of day. We have a beautiful reversal candle here. No objectives have been taken out, so we can absolutely expect New York to continue. So a very simple C2 forming the high of day, C3 continuation towards these targets. Now let's cover the GXT line sequence using the daily and the 4-hour. So let's go over a little bit of narrative here. Looks like we have some sort of manipulation over here. Price expands away into a relevant low. You can kind of see how we have this clear retracement phase of price, right? There's no real expansion going on here. Very lackluster price action. That's a continuation signature, right? So as you can see, we have a relevant high here. The space between this high and this high makes it a relevant high. When manipulated, right, confirms that, and that also confirms a high of day. So as you can see, the high of day is formed from a reversal candle. So this whole expansion candle here, this daily reversal into expansion candle, is confirmed by the GXT reversal sequence. But here we're going to be trading continuation because as you can see, price expands very, very far away from the opening price. So we know the daily is aligned, but now we have this misalignment here where this C2 candle has this large wick, or maybe it's indecisive in its direction, right? Maybe some consolidation going on after expansion. So you're just waiting for a key level to get hit for that realignment to trade C3 again, right? So I always like to have a gap back within the current range of that higher time candle, waiting for that C2 to realign itself to then trade candle 3, aligning the daily and the 4-hour again to target this low. And one thing to note, if you're ever going to do this, you always want an open draw. And lastly, let's go over the continuation sequence for the 4-hour as our higher time frame and the hourly and 30-minute as our confirmation. So simply here is when a higher time frame candle opens. What is it opening into? An aligned candle 3 or 4. In this case, we're going to be using the hourly and the 30-minute. And here we are with the reversal sequence. If you're trading a reversal into expansion candle, you're going to be confirming the low of that reversal candle with a 1-hour/30-minute swing formation. And if you're trading a continuation candle, you're simply going to ask yourself, is this 4-hour candle opening up with an aligned swing? If it's not, then you must confirm the low of this candle with an aligned swing. Now let's cover the aligned sequence using the 4-hour and the hourly and 30-minute. Within the 4-hour candle that time is currently within, price has already put in a low, it's already expanded, but then it has started to retrace. You're simply waiting for the hourly and 30-minute to hit a key level, realign itself to catch the continuation, and for price to continue this higher time frame expansion. Now let's go over candle profiling when using the 4-hour as our higher time frame and the 1-hour and 30-minute as our confirmation for the alignments. So first, let's go over the GXT continuation sequence. There are really two ways this will happen. It's either where the previous 4-hour candle reverses, the next candle expands, or you're opening up within a continuation C4, like either one of these, these expansion candles, and you're opening up with an aligned swing. So the GXT continuous sequence is really simple. You're opening up a new higher time candle with an aligned swing. So it should just expand basically. So let's go see if we're opening up within an aligned swing here. So here we are on the hourly chart. And if we mark up 10 a.m. open right here, what is it opening up as? A C3 on the hourly time frame. So this is that higher time frame candle opening up within an aligned swing. So we pretty much go straight to entry right when 10 a.m. opens. Now here is another GXT continuation sequence, except we are opening up as a C4. It can be a C, anything. It doesn't have to be necessarily within a swing formation on the 4-hour. It's just ideal, right? It's just simply that right before the higher temper candle opens, at the end of the previous candle's lifespan, it had already retraced, hit a key level, printed a swing formation, and now this new higher temper candle is opening up within it. Let's go ahead and drop down to lower time frame. So here we are on the hourly time frame. And as you can see at 1300, which is the last hour within the 10 a.m. candle, we print a C2. So what is this next 1400 4-hour candle opening up as? A C3. So it's opening up within a line swing. We have a key level, which is this low. If I go to 30-minute, you're going to see that low, right? It's technically opening up within a 30-minute C4 as well. So this is the GXT continuation sequence for an expansion candle. Now let's go ahead and cover the GXT reversal sequence for a 4-hour reversal candle. You're only going to be trading the reversal sequence when you have a reversal into expansion candle. As you can see, this candle hits a key level, has SMT, small wick, so we can expect it to expand. So you're simply going to confirm the high of this reversal candle within a line swing. So go ahead and drop lower. What do we see? First off, the daily candle is opening up like this, right? Opening high first, leaving a bunch of low resistance. So this profile, this daily profile is really set up for this move. And as you can see, 10 a.m. opens really close to this key level. So we can expect it to just open high, create that small wick, hit the key level, creates SMT. We're going to confirm the high of that candle within a line swing. Here we are on the hourly time frame. And as you can see, it is confirmed by this hourly C2 closure. We expect that to be the high of 10 a.m. and then trade the expansion of 10 a.m. So here is an example of the GXT reversal sequence, except we're going to be confirming the high of a continuation candle here. This is simply where you open up a higher time frame candle and it's not opening up within a line swing. So we must confirm the high or low of that candle with a swing formation. So here we are on the hourly time frame, and we can look back within that previous 4-hour candle's range. What do we have? A key level, right? What are we going to confirm that key level with? A swing formation. Once we have that swing formation, that is not only confirming the key level, but also the higher time frame expansion candle high, which is then set to expand towards targets such as these lows. Now let's talk about the GXT align sequence. This is where the current 4-hour candle is already an expansion candle. You're looking for further targets. The 1-hour or the 30-minute is misaligned. So you're waiting for price to come back within that current candle's range into a key level, realign itself by forming a swing formation, and they're going to catch that continuation of the higher time frame candle. So dropping down to lower time frame, let's go ahead and mark out that 10 a.m. open. So 10 a.m. opens here. And as you can see, it opens low first, reverses off of the previous 4-hour low, then expands away. So when it expands away, we're already aligned on the 4-hour. This candle here, since we just hit an objective, right? We kind of consolidate a little bit, kind of go over this little consolidation here. So now we are misaligned, right? We're not within a swing point on the 1-hour / 30-minute. We're like in candle 5 or something. We need to always be within a swing point on the 1-hour and 30-minute, always candle 3 or candle 4. So we don't have that. So we're just waiting for a key level to get hit. On this asset, you cannot see a key level, but what you do have is an SMT between 12 o'clock's low and 12 o'clock's low on another asset is an SMT fill. And that is confirmed by this bullish candle and this bearish candle, which is a PSP. So you have a 2-stage PSP, and that key level is that gap fill. And as you can see, we have a C2 candle closure, and then you can expect 1300 open to expand again. If you have further objectives, you can at least target here as a little internal to external move for that continuation of that 10 a.m. expansion candle. Now let's go ahead and go over entries. Here we have a little image putting it all together. This is going to be covering the reversal sequence. So how do we confirm the high of a reversal candle? Is a swing formation. Once we have our swing formation, what do we need? A CSD within that C2. Once you have that CSD within C2, you are good to go ahead and trade C3. How are we going to confirm the high of C3 or the wick? Is a order block. Once we have that chain of state delivery, you are good to enter. at least targeting 2R. Now let's go over the continuation sequence. This is when the 4-hour open is opening up within an already existing 1 hour/30 minute swing formation. So as you can see, this 4-hour candle is opening up as a C3 on the hourly time frame. So you are good to go. All you need to do is confirm this wick. As you can see, price opens up, testing this order block, then closes through this propulsion block or continuation order block. Once it does, set your limit there, stop loss above the high, and target at least 2R. So here is an example of using the align sequence. As you can see, the 4-hour candle opens high first, it expands, then it starts to retrace into a key level that the 4-hour candle has printed. Then it starts to retrace into a key level. If we're going to continue this 4-hour candle as an expansion, this gap is going to hold. This candle is not aligned bearishly. It also has not had a key level. So you're essentially waiting for price at a key level, reverse. Now you are realigned with this already existing 4-hour candle on the hourly/30 minute time frame. Once you have that C2 candle, look within it on the lower time frame. Do you have that CSD? Yes. Now you can trade C3. All you got to do is confirm the high of the candle. And as you can see, price opens up, hits a key level, then has that change of state delivery, confirming the high of C3. Entry off of the order block, stop loss at the high, target 2R. Now let's go over the entries within the GXT model. And that is essentially trading swing formations that confirm the high and low of 4-hour candles. And the whole goal is to mechanically align timeframes. So we always want to be at least aligned with 2 timeframes, which is either going to be the 4-hour as your higher time frame, and then the 1 hour/30 minute as your confirmation. And the daily candle doesn't necessarily have to be aligned, but it needs to have the profile supporting it, right? The size of a daily wick is just telling us how far the day can expand, right? But we don't necessarily need to have a huge expansion day to catch at least 2R. So let's see if the profile supports this idea. So for one, we open low first. That is perfect. And then we have and need a key level, right? So this 4-hour swing low, we also have SMT. Okay, so when we create this SMT, we create it at 6 o'clock. Now, does this 6 o'clock candle support expansion? The answer is yes. So that means that we can actually trade this reversal into expansion candle. So all we need to do is confirm it on the 30 minute or the hourly. So let's go ahead and drop down to those timeframes. So here we are on the 30 minute time frame. And as you can see, we open low first. At 9 o'clock is when we put in that C2 reversal candle, which confirms the low of 6 a.m. Let's go ahead and mark out 6 a.m., which is about right here. Boom. Let's go and delete this real quick. So we have that small wick. We're good to go. So really all we need to do is have a CSD in candle 2. Then we can trade candle 3. So let's go ahead and drop down to the 3 minute or the 5 minute time frame. It's completely up to you. So here is the end of that C2 candle. And as you can see, the last 5 minutes of that C2 candle, we indeed do have that CSD. This is where you have to decipher, are you a reversal trader? Do you want to take the first CSD like this, right? With your stop, with your TP up here or up here, or do you don't wait for extra confirmation, right? So that's up to you. If you want it for extra confirmation, you're simply waiting for the next candle to open low or put in some type of continuation CSD, which happens right here. So this is the open of 9:30, which is the C3 on the 30-minute time frame. As you can see, it opens high first, so it doesn't really give you an opportunity, but then it comes all the way back down, forms a new low within these fair value gaps, and that is then confirmed by this CSD. So now the wick of that C3 is now protected by this propulsion block here. So this is where you can enter here, push stop loss down here, and target a minimum of 2R. So let's go ahead and see how that plays out. Personally, I probably wouldn't put my stop loss all the way down here. I'd probably just put it at the open or maybe here, or like EQ of the wick, something like that, but we'll just play it out. It doesn't really matter how this plays out. We just care about the mechanical process, but here you can see that we have at least 2R and our target's met. Now let's go ahead and cover the GXT continuation sequence, putting it all together all the way down to entry. So here on the daily time frame, we have a 2-stage SMT fill where the PSP is creating that gap and then we have an SM2 at the PSP high, which is also the gap. So you have that two-stage SMT fill or two-stage PSP, whatever you want to call it, right? But we know that we want to trade this reversal out of this gap. We have a small wick, so we are trading a reversal into expansion candle. So the next step is confirming the high of this candle with a 4-hour swing. So let's go do that. Okay, perfect. So we need a profile. What do we do in the previous sessions? Just consolidate. They don't hit any key levels. This is the key level right here. We can see that 6 a.m. hits that key level. And when we hit that key level, you're just going to check the size of the wick on the 4-hour. You see this big wick right here. That means that we want to wait for the closure of that 4-hour candle. So boom, we wait for the closure of that 4-hour candle. And then all we're going to ask yourself at 10 o'clock is if we are opening up within a 1-hour/30-minute swing formation. If we are, we can go straight to entry. So here we are on the 5-minute time frame. Let's go ahead and mark out 10 o'clock, which is C3 on the 4-hour, but also on the 30-minute/hourly time frame. So boom, here's 10 o'clock. Do we have a CST before 10 o'clock? Yes, we actually do. Boom, we have that CST. It happens in a V-shaped fashion. That's how we want it to happen. Now, this here may look valid to you guys, right? Because you hit a key level, you have the propulsion block, but this is risky because when we jump up to the 15-minute time frame, the high of that CST is a 15-minute gap. So this is a tricky one, right? Where this is not really a protected level, right? We could easily do something like this. Price could trade into this relevant low, right? And then retrace into that gap, right? ERL, IRL, and then continue. So it's really something you want to be careful about when looking for entries. I never want to put my lower time frame stop loss on a higher time frame gap like this on the 15-minute and above. So that's something to be wary about. But if we actually drop down to the 3-minute time frame, you will see something very interesting. So on the 5-minute, we have a CSD, right? On the 3-minute, we do not. So we can already assume this is the reversal is already put in, right? We have the V shape here. And you can see that 10 a.m. on the 3-minute opens up into this gap here. Into this gap. We already have the 5-minute CSD. So I'm viewing this right here as a propulsion block in the high of C3 and 10 a.m. right here, right? Shallow retracement is what we want to see, creating that small wick into a key level. So I'm almost viewing this as a repulsion block. So this is an absolutely valid entry to take, just like this. And what are we going to target, guys? Is all the way down here, right? Which is that daily ERL technically, right? So we're basically trading daily IRL, ERL, aligning expansion candles in a mechanical fashion. And this is an opportunity of 6.6 RR. Now, lastly, let's go over how to trade the GXT align sequence where we're aligning the daily, the 4-hour, the 1-hour/30-minute. So here we can see that we have traded into the previous high. We have an SMT. When we trade into that, we have the small wick, right? So we can expect this to be a reversal expansion candle. We have the profile supporting it, right? What does it do? Lackluster, just opening high first, leaving a bunch of failure swings. So this is what we can target, right? It's a pretty large wick, but the profile supports us trading that reversal candle. So everything checks out. Now let's go ahead and drop down to the 30-minute. So now check this out here. The high of the 4-hour candle is actually going to be confirmed by this hourly C2 candle. So we're technically trading C3 right now. If we drop down to the 30-minute though, you can see that we can't just directly enter this trade at 11 o'clock because we're going to create that future gap, right? If we open high first, like we actually did, so check this out here. When this candle printed, it opens high first, right? Maybe it gives you a lower time for entry, but that's risky. Why? Because it's a future gap right here, right? You can actually see we actually retrace into it, but this is the weaker asset, so it didn't trace into it, right? So you got kind of lucky. You're going to see that YM did indeed trace into that, right? So if you try to do that on YM, you would have got stopped out because your stop loss is, again, on a higher time frame gap. So here you can see that the 4-hour is already aligned. So we're waiting for it to retrace back into the expansion candle's range, hit a key level, and realign itself. So here's a C2 candle and an SMT, right? So we go back to NQ, the weaker asset. We can view this as a C2 because it hit a key level as SMT. So now we're going to trade C3 and realign ourselves with the already existing 4-hour reversal to expansion candle, right? There's a reason for this 4-hour candle to continue because it's open draw. So let's go down to 3-minute. So here we are on the 3-minute time frame. When we look back within that C2 candle, do we have a CSD? We do indeed have a CSD. So again, it's all up to you. Do you want to just market execute right when the candle opens, put your stop loss up here? Or do you want to wait for extra entry? Whatever you want to do. But essentially, we would need this right now. We need this CSD right now if we're going to confirm the high of the next candle. So let's just play out price. What do we do? What do we do? Okay, so we just took out this high here. So now this becomes the most recent opposing candle. So as soon as we close below there, you can go ahead and look for entry. Boom, we close below right there. So you'd market execute on the close, put your stop loss at the high. And again, we're going to be targeting at least 2R. But what we really want to target is that daily open or all these lows really. Right? So if you play price, you're going to see that we get pretty close to stop loss. So maybe if this is too risky for you or whatever, maybe use the 5-minute for entry, right? Well, if you use the 5-minute, that's your CSD right here, right? Doesn't really matter. Whatever you choose, I don't see a big difference between the two. But as you can see, this plays out very nicely all the way to the lows. Let's see if you can enter this CSD here. Is it a higher time frame gap? Yes, it is. I wouldn't trust it. The only time you ever see these gaps being left open, it's typically really high in the ranges, like really high in the ranges, kind of like this, okay? But we'll go over that in a later lesson. But also in really heavy markets, like really expanding markets, which is sometimes harder to anticipate. But yeah, this is an example of the GXT align sequence. So what is one way we trade a C2 candle is you have to hit a key level, you have to have SMT, and you have to have a small wick, right? For price to create that reversal into expansion candle. If it has that large wick, you typically want to avoid it. Now, what are we going to confirm this wick with? A CSD. Ideally, it forms in the fashion of this V-shaped signature. Once it forms that signature, you can go ahead and put your entry there. Now, the other way we're going to trade a C2 candle is a 2-stage PSP. This is when the previous candle is a PSP. Then it runs out the previous candle's low, forming that small wick, the SMT. Then you confirm that with a CSD. And of course, you need this formation out of a key level, as always. So now let's go over entry types, C3 positional entry. So this is when we have a previous candle closure. We mark out equilibrium of the entire candle. We're going to look for a key level within the previous candle's range. In this case, we're going to be talking about a fair value gap. And as you can see, it's the only key level in this area. So price is going to continue. It's the only area to continue from. So this is something we can take advantage of and put our limit at that fair value gap, put our stop loss at the low. Here is essentially the same thing, except we're looking back within the previous candle's range for that CSD or that change of state of delivery. We're going to mark that out. And as you can see, this is the only area for price to really continue from. So you can set a limit on that change of state delivery, assuming that price is going to continue in your given direction without extra confirmation. Now here we are in entry type C3. This is when we actually confirm the low of C3. So it's a little bit more conservative. Now this is when candle 3 opens low. In the open low of the candle, which is forming the wick on the lower time frame, will be an order block. So as you can see, price opens low. The open low causes price to create down close candles. When close through, confirms the wick of the higher time frame candle, right? So now the low of this candle is protected by an order block, and that will be your entry and confirmation to C3. Once C3's low is put in, they can expect it to expand. So really there's pros and cons for positional entries versus intra-candle change state delivery. For positional entries, you have less confirmation, but you're typically going to get in more often. Whereas change state delivery, there's more confirmation, but you could get left behind. Now we are going to be covering entry types. So there is a lot of different ways you can enter the market. You can trade C2 candles, C3 candles. You can take the early entry at the reversal. You can take continuation. This all is up to you. It's not for me to decide. It is for you to decide. Gather data. I'm going to give you some options, the mechanical process to trade each one, the pros and cons. So first, we're going to be going over how to trade C2 candles. There's really two ways to trade a C2 candle. This is going to be the first example here, and that is where you need to have three things really. That is a key level. So check one is the swing high as a key level. You need to have SMT, that's check two. And you need to have a small wick because we want to trade a reversal into expansion candle, right? So it's a one-stage SMT, right? Which is the least probable way to trade a C2. We'll get into the others. But all you need is to have a V-shaped CSD, and you're essentially entering that first CSD. So let's drop down to the 3-minute or the 5-minute chart. Alrighty, so here we are on the 3-minute chart. It's a trade that I actually took. So as you can see, at 9:30, we run out this high. So we're pairing this with the driver as well, which is what makes it a little bit more higher probable. And we see that V shape away, that displacement away. At this point, price has now started to expand away from the opening price of this 30-minute candle, which is really good. You can see this 30-minute candle open side first as well. So these are all pointing towards bearishness here. I personally take this fair value gap entry right here, right? You have some opportunities to maybe get this limit, but I didn't know if we're going to get this limit or not. Also, price is going to be very quick at this moment. So this is like the pros and cons to entering a C2 candle. You are always going to get the entry usually, but you know that propulsion block is like never guaranteed, right? That's the cons with a propulsion block, but it's a lot more safer, right? There's a lot more confirmation. So you see the pros and cons here. Also, my stop loss is naturally higher in the range. If I enter here, my stop loss is higher in the range near the actual reversal. Whereas if I enter here, it's like lower in the range. You get what I mean? So there's pros and cons to both. I do like entering the first CSD when it's really, really, you know, creating that displacement away, that V shape. I like to see lower time frame gaps. So that's just my personal style. But let's go ahead and go over the other ways to trade a C2 reversal. So here we are in the last way to trade a C2 reversal into expansion candle. And that is the same thing as the last example. It's a two-stage PSP, except the key level is a gap, right? So any two-stage PSP you trade, it has to be from a key level, right? Whether you have SMT with the key level or not. So whether you have SMT with the key level and then a two-stage PSP, or no SMT with the key level and then two-stage PSP, either one works, right? Here we have SMT with the key level, but it's a continuation PSP, right? Where the PSP high is a gap, right? So this is the way we like to trade continuation PSPs. We don't trade continuation PSPs alone. The PSP high is a key level, right? So as it runs out this high and trades into the gap, we have that key level SMT. It has a small wick, right? Remember we talked about how to trade a reversal candle. What do you need? Key level, SMT, small wick, right? We have that, but in the form of a two-stage instead of a one-stage SMT. So you can trade this expansion candle here. And as you can see, when we drop down to the lower time frame, what do we got? We have a beautiful CSD here and a propulsion block here. So that is something you could take, either or, all up to you. So now let's go over the second way to trade a C2 reversal candle, and that is with a two-stage PSP. In this case, we're going to be trading a two-stage PSP away from a swing higher low. And it doesn't matter if you have SMT with the key level or not, with a swing higher low, but it is ideal always to have SMT with your key level, right? So in this case, you do have SMT with that key level, and then it's confirmed by a two-stage PSP, right? But you don't even need this PSP here. This is another variation where you have SMT with the key level. In this case, you would need that. You would need that SMT because if you don't have SMT here, you don't have a PSP here, you only have one-stage cracking correlation, right? But now in this case, you have two-stage cracking correlation, right? We have SMT with your key level, and then you have your strength switch SMT via consecutive candles, so you can trade this C2 candle here. But like I was saying earlier, if it's a two-stage PSP, and then both assets hit the key level, it's okay. If there's no SMT with that key level, it's okay because the two-stage PSP is a two-stage cracking correlation. So you guys understand. But let's go ahead and see what price looks like inside of the C2 candle. So here we are inside of that C2 candle. And as you can see, that first CSD we can technically take, right? Because this is the last opposing candle. After price creates that SMT, we displace higher, we close through. So we're going to assume that this is the low of that C2 candle because that is the two-stage SMT. So then you can put your entry here. entering off that first CSD. What are we going to target? The external high. Any targets beyond that, here is a 4.3R. And you can also, as well, once we close above here, for C3 on the 15-minute time frame, as soon as you close above there, you can take that as well. So boom, you can take that. Put your stop loss down here if you want to take that continuation. And price ultimately hits our target. So now we're going to talk about how to enter a positional entry. And this is essentially entering on the reversal, but you're going to be waiting for the C2 candle to close. So on C3, what you're essentially doing is looking back within C2's range, looking for a key level within it, and entering off that. So first, let's go over how to do this with a gap. So since we are on the 15-minute time frame, we're entering 15-minute C3. We're going to use the 1-minute chart. So how do we validate a C2 candle? Is if we have a CSD within that previous candle's range, we do here. And as you can see, this right here is the opening price of the candle 3. And when I look back inside of this range in the upper half, what is the only key level there? A fair value gap. So this is where you're going to assume that C3's low is going to form from this fair value gap. You're assuming that price is going to go like this. Open low into that fair value gap and then expand higher, essentially, right? So you're going to enter your limit there, your TP up here, put your stop loss at the body here, and yeah, that's essentially what you're doing. Instead of waiting for the confirmation of this candle's low, this candle 3's low, and this is the cons to waiting for a propulsion block, right? Like sometimes price just expands like this, and you don't really get an entry. But typically with a positional entry, you're always going to be in the trade. It's just less confirmation. So here we're going to talk about two types of entries. We're going to talk about the second way you can enter a positional entry, and then the way we trade continuations. So here we're on the 30-minute chart. We run out this low. We're going to target this high. We always use swing formations paired with order pairing ranges. So what we're going to do here is mark out our previous candle's range. We have a C2. So what are we going to do? Look for a key level within the previous candle's range, in this case, the upper half, since it's a bullish C2 candle. So we're going to look for a key level that we can put our limit on for a positional entry. So here we are on the 5-minute chart. Let's go ahead and bar play right when this candle opens. It's about right here. So this is an example of putting your limits on the CSD that confirms C2, right? So this is the first CSD that confirms C2. So you're going to be assuming that candle 3 opens low into it and expands like this, right? So boom. Let's go ahead and put that limit on like this. I'd probably put my stop loss at EQ of this wick. That's fine. TP up here for at least 2R. So boom. You are now in this trade. Let's mark out the open of C3, which is right here, as you can see. All right, so you're in this trade, right? There's no missing this trade now. You just have less confirmation. So now we're going to talk about how you would take a continuation trade, right? And this is waiting for price to open low first. You're not entering yet. Hitting a key level within the previous candle's range, right? And then waiting for the confirmation. So the confirmation to a key level is a CSD. So boom. We get that CSD. So what this is actually doing is confirming the wick of C3. If I go back to the 30-minute here, you can see we just put in that wick. We opened low into a key level within the previous candle's range. We confirmed it on the 3-minute chart. So now this is way more extra confirmation, right? You're going to be entering a little bit more higher in the range, but those are the cons, right? Is you have way more confirmation to this trade. It's all up to you what you guys want to do, but that is how we trade continuation. It's letting the wick form with C3 or just letting the wick form for whatever higher time frame candle you're trading. I personally like entering the first CST. And we're going to go over why when we go over management. But let's see how this plays out. As you can see, they would both play out for a very nice trade. So now let's go over stop loss placement. This is where we're going to put the stop loss at the body of the order block. And that is typically when price creates either a very bulky opposing candle. As you can see, this move lower is made up of mostly body, or when price just expands away and you're into from a gap, we would never expect price to come all the way down to this body, reject you, and then go in your direction. It's typically very unlikely to happen. Of course, it can happen sometimes. This is just a way you can get extra RR. This is typically what I do personally, just because we know that expansion signatures after reversal do not create these deep pullbacks. So now let's talk about stop loss placement when putting it at the swing low. And that is essentially when looking at the CSD that confirms the reversal is made up of mostly wick or has a large wick, and it's like 50% wick, 50% body. You can't just put your stop loss here, right? That can easily get wicked out. So we're gonna put the stop loss at the actual swing low. Now let's talk about stop loss placement for continuation. For continuation, I usually always just put it at the swing low because the higher and higher you go, the more we can pull back and whatnot. But early on in the reversal, guys, we should never be returning very deep back into low, like ever. So typically, I will just put it at the actual swing low. It's up to you guys though. Trade management is all personal to you guys. Now let's get into trailing the stop loss. So this is something that is really beneficial to my trading. So let's go ahead and go over it. So here's an example of when you're entering the first CSD, which I am personally also a fan of. I actually like entering the first CSD. And here is actually why. This slide actually shows it perfectly. So boom, you enter the first CSD. Ideally, you want to have a V shape and a gap, ideally, but a V shape at the very minimum. So boom, you enter your trade right at the opening price of this CSD per stop loss at this low. And once price retraces to tag you in and then continues, that's going to give you that propulsion block. So this is what most people enter off anyways, right? If you're a continuation trader, you're already entering off of this CSD here and putting your stop loss here regardless. This is when you take your stop loss from here and move it to that propulsion block. So now you're cutting your trade in half, or actually like even more than half, right? Without even being up a lot of our R. We're not even up 1R and we just trimmed our stop loss like 60%. It's really, really powerful. And if we let price keep going, it's going to create order blocks above our entry, which should be in theory protected levels in expansion. So once we form that order block above our entry, this is when we can actually go break even. So now let's talk about trailing your position when trading a continuation. So this is when you enter off that propulsion block. Once price revisits that propulsion block or just forms that order block above your entry, this is essentially when you can go break even. Another way you can go break even is simply if you hit 2R. So now let's go over when you should really go break even, when to trust which order blocks, etc. That is all about the size of the retracement, a lower time frame. So as you can see here, we're entering off that first CSD. And this little pullback right into high-end premium is not a relevant level to go break even at. We can easily retrace here, right? Over here is more so what we're looking for is if you retest your entry, you sweep out a low, any type of extra confirmation like that, that deeper retracement is when we can typically go break even, right? And this is the real ideal example here is when price retraces into EQ or even deeper back into your entry. We don't want it to go too deep, but this is like perfect. We should never return back into this level here. Yeah, you know, EQ and below should never be returning. So that's when you can really trade your stop loss confidently. Now let's talk about targets. You will never target under 2R. Now the way I personally trade, your average RR, you know, when you're holding with the daily candle to these objectives, your average RR should be a lot higher than 2. Should be in the 3 to 4 range-ish, right? But 2R is a bare minimum. Now let's talk about partialing. This is really what I'm talking about with being higher than a 2R. So I'm not the biggest fan of just targeting 2R and partialing there. I'm more of a fan of partialing at relevant levels. So if this is your final TP, your higher time withdrawal liquidity, this is the reversal. Let's kind of walk through everything here. So here you can enter off this gap, right? Once you form the CSD, you can pretty much move this up to here. I should have probably edited that maybe, but I don't really think I was going for that. And I wasn't really trying to explain that in this slide here specifically, but that's what you would do. Once you get the CSD here, this propulsion block, you can your stop loss break even like already, right? That's a pretty decent size retracement into EQ. That's more so what I'm talking about. You want that decent size retracement. But anyways, for targets, you're going to look for internal levels on your way to the drawn liquidity. As you can see, this is the relevant high on your way to the drawn liquidity, right? This is where you want to be partialing half your position, at least above 2R, right? You're going to be partialing at 2R, 50%. and then let the rest run to your final TP. That's what I do personally. I always take off 50% usually, if the final TP is very realistic to get hit. Now here we're going to be going over trade management, where to put your stop loss, when to trail your stop loss, when to partial, all that good stuff. So first, let's talk about when you can put your stop loss at the body of a candle versus the actual swing high. So first, let's talk about how you can actually put your stop loss at the body versus the swing high. It is simply when the opposing candles that you're using to confirm the reversal are bulky or mostly made up of body. So as you can see clearly, this is mostly made up of body. So you can enter here or set a limit, either or, and you put your stop loss at the bodies up here. The reason for that is if we take a fib tool, mark it from low to high, we would never ever want to see price come all the way up here. That's not what reversals do. They don't make these deep retracements. So there's really no difference between putting it here and here. There's no reason to put up here, right? It shouldn't be coming up here to begin with. So you can actually increase our RR slightly by doing this. Now here's an example of where the opposing candles is not so, bulky. There's wick, right? So now here is an example of where you got to put your stop loss at the swing low. So an easy way to tell if these bodies are too small is by marking a premium discount tool from the wick to the opening price of those opposing candles. And you see how the end of these opposing candles are kind of around EQ. If it's in premium, that's definitely not good. You don't want to put your stop loss at the body, like ever. In this case, it's around there. It's kind of hard to tell. So really just enter here. At the very least, put your stop loss at EQ the wick. Because again, it's like the same logic, right? You don't really want to see price coming all the way down here. It's like the same thing. It's like here versus here, not really much of a difference. But here it's like, it's around 50%. It's kind of hard to trust. So in this case, you can put it at 50% or here, up to you. But yeah, you're gonna see what happens. You can easily come down in here and wick that area. Especially, like I said, if the end of those opposing candles are in the premium end of what we just marked out for our premium discount tool, it's definitely a no-go. Now we're gonna talk about continuation entries, when to put your stop loss at the body versus the wick. And it's really the same thing. I will say it's a little bit riskier in continuation versus reversals to put your stop loss at the body. That's just because naturally in continuation, we've already expanded. It's really all about the opposing run size, right? For the retracements or the order blocks. If they're large, right, then typically we're not going to retrace again. But if it's like some shallow stuff, let's say we get the reversal, it's really shallow. It's really hard to trust putting your stop loss here. I'd rather just put it here, man. There's not really too much of a difference. The reason why you can be really aggressive at the reversal is because when you reverse, we should not be retracing very deep, right? Think about a reversal, expansion, with expansion. It's like, I don't want to see price go all the way up here again. Whereas, in continuation, we've already expanded a lot. Naturally, you're already in, really low in that range technically, right? You're in discount still, so it's a little bit different. It's a lot different. It's up to you, but you can apply the same rules. But typically, I just put it to swing high or low. Now let's talk about how you can trail your stop loss when trading a reversal, right? So this is basically trading the first CSD or the first gap, when trading a C2 candle or when taking a positional entry. I personally love doing this. I'm going to show you exactly why. You can pretty much trail your stop loss extremely quick, right? So in this case, you would definitely be waiting for a gap to form. So why is that? This candle creates a CSD, but that wick size, but that stop loss size is way, way too large. So in this case, when this happens, you're just gonna wait for a gap to form. And you're gonna wait for that gap to be tagged. You don't want to wait for a CSD limit here. It's highly unlikely to happen because remember, after reversals, we don't really want to see those deep retracements into deep, deep OTE. That's what this would have to do for price to tag this CSD. So we're going to put our stop loss here. that is good enough RR and whatnot. So this would be your first entry. This is where you're entering early on in the reversal, okay? So as price tags you in, it should be creating opposing candles into your entry, or to tag you in, right? Into that refined key level, right? There's always gonna be a key level typically. And to confirm that key level, you need a CSD, right? So boom, you're gonna wait for that CSD to happen. So boom, as soon as the CSD happens and price retests your entry or tags you in your entry, there should be no reason to return back to here, right? This should be the new invalidation level. This was the invalidation level before. Boom. As soon as you get tagged in, price goes in our direction just a little bit. That's all we need price to do, to go in our direction a little bit. Notice how we're only up 1R. We're only up 1R. But what we can do is already start to trail your stop loss to here, because this is what most people enter off of anyways, right? This is the safer entry, technically, to take right here. So this is all you need price to do. So, your stop loss is this big, 94 points or whatever, and now it's only 35. You just cut your stop loss in half. And what you could do as well, if you really wanted to, was add on to this position. You technically could do that, right? You could add on to this position. And this is how you get your winners to be huge. When you do this, your winners are absolutely massive. You would technically only lose less than 1.5 R, technically, right? But that's something you guys can do. This is something I love doing. It's so powerful because most of your losses are not even full losses, right? So it's extremely powerful. I highly recommend you do it. But again, this is completely optional. It's all personalized with entries and trade management. So it's something for you to test. So now let's talk about how to manage your trade when you enter a continuation entry, right? This is where you do not enter the first CSD, right? If you did enter the first CSD, it would look something like this, right? So you see this big wick if you mark out from the opening price here to the actual swing low. This is what I'm talking about, where the end of those opposing candles is in premium. You got to put your stop loss at least at the 50% of the wick or down here. That's just too big of a stop loss though. So like EQ of the wick is fine, something like that. And as you can see, when price tags you in and that's confirmed, that's when you can trail your stop loss to here, all right? But we're talking about if you enter right here for this propulsion block. The way you're gonna basically manage your stop loss is the same thing, really. You're just gonna wait for price to retrace back to your entry, right? Put in a decent propulsion block or opposing move lower. We're gonna talk about how to mechanically know this is valid later. But once it does that, and then we basically create a CSD above your entry, that's when you can go break even, all right? So this is technically the protected level. So boom, you go break even. Now you're already, risk free, and you're only up about 1.3 R at the time. And you can see what happens here. It completely saves you. Now we're going to talk about how to filter out these order blocks that we're using to go break even. And it's all about the opposing run size using premium and discount. So as soon as you get your CSD, you're going to mark out from the reversal points to the retracement high. So at the point, this is the retracement high. And where you want this CSD to print ideally is around EQ. Notice how the CSD only retraces into premium. That is not enough, right? That's too little of an opposing move, right? We do not want to go break even too quickly, just to get whipped out, break even, and then price to go in our direction, right? We don't want to overly manage. We manage with logic, right? There's a reason why we can do this, right? It's not because I'm scared to lose. No, in expansion, we should be creating shallow retracements, right? But not just any shallow retracement. We got to add some type of filter. That's what we're doing here. So we're not going to move our stop loss here, right? We're going to wait for price to create a more established level, right? To move our stop loss at. So you're always going to move your premium discount tool as price expands. So this is the highest point at this moment. And this is more what we're talking about right here, is a more well-defined retracement into EQ, or maybe sweeping out that low. If it sweeps out the low in premium, that's okay too. Like we just want some like, extra confirmation here. So a nice sweep of a low, even if it's still in premium, that's okay too. But as you can see, we sweep at this low in EQ. So our stop loss would look something like this. We'll be entering off of here, stop loss down here. Again, no reason to put it down here. But as soon as we have this CSD right here, our stop loss goes from 82 points all the way to here. Right? So basically, you can go break even, honestly, at this point, because the price shouldn't be coming down here. If this is truly going to hold, it should be coming down here. So that is a great example of how to actually move your stop loss and how to filter out when to move your stop loss. So now we're going to talk about how to hold your trades, when to partial. So we're always going to be trading a universal model, and we ideally want to hold our trades to that draw on liquidity, right? So we're always going to be trading away from some key level on the higher time frame, and our draw on liquidity is the opposing side of that, right? So this is IRL, ERL. So the higher time for ERL is going to be our overall draw on liquidity, and I'll show you guys how to partial. So let's drop down to lower time frame. So here we are on the hourly time frame. We're going to be trading this C3, right? This is our overall draw liquidity, but what you're going to look for is internal relevant levels within the draw liquidity in the actual reversal, right? Anything relevant in there is where I want to be TPing, and at least has to be 2R. So now let's drop to the lower time frame. So as you can see, we have that V-shaped signature. This is actually an example I've used, so you guys are familiar with this, where we have that 5-minute CSD already. And we kind of have this propulsion block on the 3 minutes, confirming 10 a.m. So this is what you'd be entering off of right here. Put your stop loss up here. And as you can see, I'm not just going to TP at 2R, right? Especially I'm not going to TP the whole thing, but I'm not just going to partial at 2R. There's no reason to, right? If price can come all the way down here, it's highly likely to hit this low. So you're kind of just giving away like 0.3R. I know it doesn't sound like much, but in other cases, it's a lot more. There's no reason for price to reverse from, right? Is price can do it sometimes? Yeah, price can do anything at once. But in most cases, it's not. It's going to go to the actual draw on liquidity, relevant levels, right? And even this, it's like this low here, it shouldn't be reversing price, right? We want to be holding at least 50% of our position to our draw on liquidity, right? So I only personally, if you're asking me, I only TP 50% of my position typically at relevant levels, unless there's just not enough time in the day, or I just don't think price is going to get to a certain level, which is going to take some experience for you to understand. That's typically what I'm doing if I think price is going to get to the overall draw on liquidity. My first partial has to be at least 2R from a relevant level, internal to the universal model, and I only take off 50%. So when you're holding your position to the overall draw on liquidity, your RR will be well above 2R for your average. So when you are actually holding your entire trade to the overall universal model draw on liquidity, your average RR should be well above 2R. It should realistically be somewhere between 3 to 4 average RR. You're going to look for a win rate of 40 to 50%. That is amazing with that RR, right? If you are a 2R trader, right, I'm not going to tell you how to trade. If you want to just take base hits, 1.5R, 2R, anything above 50%, man, is killer, right? If you're like a beginner or something, that's something you can really strive for. Even like 40% win rate, man, with 2R, you can still make a ton of money. You don't need an 80% rate. You're not going to have an 80% rate. I don't have an 80% rate. Don't expect it. Expect a 40 to 50% win rate when holding your positions to these targets, and the RR will play out in your favor. And the way I manage personally, a lot of my losses, are not even full losses, right? We can go break even super quickly, etc. So it actually ends up playing out very, 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 very nicely. But yeah, trade management and entries is completely personalized. It's all up to you how you guys want to trade. So just keep that in mind, study, backtest, journal, and you will find exactly what is right for you.